All right. That should work. Hopefully this is working. All right, cool. YouTube's on. Sorry guys. I haven't streamed in such a long time that the last time I was streaming was like with my friends on Twitch. And so like my stream key wasn't working. I'm like, what the hell is going on? Why is YouTube not working? Why can't I go live? But we're good. What's up guys? Don't have the camera on today. I feel still pretty sick. I'm still getting over it. I see we got 20 people here, so hit the like button. What I want to do in this live stream is just kind of talk about Tesla like we normally do in our videos, answer some questions, go over some things if you guys have any types of questions, and if not, then just kind of share how I find trades and what I'm looking for. I actually posted, funny enough, on Twitter a couple of days ago this new strategy. It's so funny because it's literally nothing crazy, but I was showing this new strategy where if you would have followed the strategy specifically, that you would have made 9,000%. Here it is, 9,000% on AMC in the past 3 years, as opposed to if you would have just held the asset itself, you would have only made 50%. And so I want to talk about that in this video. It's literally not crazy. We're going to definitely go over it. And if you guys can hear anything in the background, please let me know. I have like some lo-fi music on that I normally put in my headset, but I just don't feel like doing that today because I'm sick and I feel like crap. So if you guys have questions, let me know. We have 62 people, so definitely hit the like button. Please throw out any questions you guys have. Like, even if you think it's a dumb question, there is no such thing as a dumb question. There's probably people here who have the same question as you. So definitely ask that. Wollen Mand. I knew it would run today because you said yesterday it wouldn't completely. Yeah, I really didn't think so. Like, what we were watching for was this big chunk in volume. And so let's just cover Tesla first. So what we were talking about yesterday was this squeeze that was sort of set, I wouldn't say squeeze, symmetrical triangle that was setting up here. And we were looking for this push over 200. In order to get that push, we needed volume. And the issue was we just weren't getting volume. If you look at the volume bar here on the 1 hour on the left side of your screen, so the left side of your screen is going to be Tesla and it's going to be a 1-day chart. And the right side of your screen is just a 1 to 2 minute, or I'm sorry, a 1 hour chart on your left, because I usually trade off of a 1 hour. But what you can see is if you look at this volume, I'm just going to highlight it so it's easier. But if you were to look at my volume bars down here and you were to see that line, that blue line I have trending sideways, that's a 50, or it's just essentially going to be an EMA. So it's just showing you what the average volume is within that setup. So when you look at Tesla over the last 3 to 4 days, the volume's been pretty silent. We get a big peak usually in the morning, a little bit of volume at the end of the day, but it's been relatively silent. Look at how big this candle was just for the first trading hour of the day so far, right? That is more volume than we've seen probably, like, that's the peaked high amount of volume that we've seen in the last 20 days. So I didn't think that we were going to get that volume. I thought they were going to test. I thought we were going to pull back, and I thought we were going to potentially see that 200 range, or I'm sorry, 190 and like 180s, but we're up through it. We're pushing. The volume is coming into this. What you want to see is more and more volume coming in, like at least a little more. And then we could probably see our way up to 224. Somebody asked Jason Nara, can you cover when it would be good to go short on Tesla? I think it would, so, all right. We'll cover that in a minute, because I think I'd have to define what is good. Going back to Twitter real quick and looking at this is something I want to share, and I want to probably, I don't want to like say it so much, but like, I'm sipping coffee. But if you look at something like this, like a strategy like this, or any strategy in general, right? The goal is not to make money all of the time. If you look at this strategy right now, 9,892%, but you're losing money 29% of the time. So let's just actually take a look at this example first before we cover when is a good time to go short. All right, so before we do that, let's just take a look first at this. So let's go through, and what I want to do is go to TrendSpider, and I use this really to back test strategies. There are a lot of different ways that you can test strategies. There's, I think you can do it in like TradingView, all these other ways. I use TrendSpider because I like it. It's a very expensive program. The one that I have is like $110 a month, but because I know those guys over there, they just give it to me for free. They hook it up. They're awesome. But I will say to everybody, like, if you have that extra money, it's great. If not, you don't need it. So the strategy specifically, and I want to talk about this first before we talk a little bit more about Tesla, simply because you brought up a really good question, Jason, of like when's a good time to go short. And I kind of want to explain like my personal strategy of trading more on this channel. Like, I did not plan this channel to become as big as it has, and almost everybody just wants updates, which is great, but I kind of want to explain what I mean when I take positions and why I take positions specifically. So all this strategy is, it is so simple, but the issue is just following it. All the strategy is entering whenever an 11 EMA crosses up through a 22 EMA, and exiting every single time the inverse happens. So every time that EMA therefore crosses back down, we're going to get out. So if you guys have ever traded like golden crosses, that's actually one I should test. I'm actually going to write that down. 10, that's my things to do today. Test crosses. So it's basically like testing a cross, but instead of a golden cross, like a 50 and a 200 cross, we're looking at an 11-day and a 22-day EMA cross. So all we're going to do to look at this is I'm going to use 7,000 candles because I like using a bigger time frame, so we just have more data to go by. But what we're going to do is just add a parameter here, and we're going to go to indicator because that's what we're trading off of. We want to see right now what happens if the 1 hour, we're going to pick the 11 EMA, which is my purple indicator, and we're going to pick crosses up through another indicator, and this time it's going to be the 22. So every single time this purple line on your left crosses up through that blue line, we will enter a position. Okay, and every time that blue line or the purple line crosses back down through the blue line, we are going to exit our position. So to do that, we just do the inverse. We go to add parameter, condition, indicator. We're going to pick our 11 EMA, and we're going to get out if it crosses down through the 22. Are we all here? Everyone understands that, right? If you don't, please let me know and I can go over it. And definitely hit the like button because that will share this video out. So if we run these numbers right now, you're going to see, I'm going to maximize it. So it's still going to be pretty hard for you to see, but I know now that you can actually like zoom in, I believe on your phone to look at some of this. So Tesla is an example that if we were to actually just look at Tesla over the past 4 years, it's going to be over here on the right side of your screen where it says tablature data. I'm kind of like turning my mouse around it. Hopefully you can see that. So obviously Tesla is the first thing. Data analyzed 4 years. So if you were to do this on Tesla for the past 4 years, you would have made 939% returns. If you would have just held Tesla, you would have made 917% returns. Now, in Tesla specifically, which is one thing you don't see a lot of the time, but with Tesla specifically, you would have been better off holding the shares just because of tax issues. So yeah, you would have made more money if you traded like this, an extra 30-40%, but if you would have just held the shares, you'd only pay 15% taxes, as opposed to like the government taking 30-40% of those taxes from you over time, because at the end of the day, you're just going to be losing money to taxes. What's up, Tom? What's good? All right, Deshaun says, understood. Alpha, what's up, Cutie Pie? Good morning. Let's see. Truly, do you see 6 months? Are we going to grab this? So the reason I'm saying this here is because if you look at the actual data, in 4 years to make 939%, that's fucking amazing. Like, it's not that much more than the actual asset, but still, this is what I want to get my point across. And the one thing that I'm going to slap into the face of everybody who watches me, because I don't talk about it enough, right? Everyone sees all of these YouTubers who are, trading YouTubers who are making all this money and just fucking killing it. And what I want you to understand is that you don't have to be right more than 20-30% of the time. And that's something they don't say, because that's not cool, right? It's not cool for you to sit here and follow trade after trade and lose 50-60% of the time. But the issue is because people just don't have risk management. I see it happen all the time. Like, people will come into my academy or they'll come to my trades and they'll be like, all right, I took 4 or 5 trades, like this isn't working out. But then I have to show them the data, like, yeah, because if you can look at the hard numbers and realize that you would have taken on Tesla 124 trades in 4 years, you would have lost 70% of those trades. Again, you would have made nearly a 1,000% return on your money in 4 years, and you would have lost 70 out of 100 times. One more time. You would have taken 120 trades and you would have lost 70%. And it's like, people don't want to do that. Like, who the fuck wants to just lose 70% of the time? I don't care, because I know the numbers and I trust the numbers and I trust my skill. But the issue is, like, most people can't do that. And this is the most important thing, guys. Like, I need you to get this point across more than anything. There's two numbers, and the only two numbers we give a shit about in any of this equation is your average win and your average loss. And if you're looking at your own strategy as a trader, look at, if you're only going to journal, two things. What is your average win? What is your average loss? So right now, my average win is about $1,000 to about $1,200. My average loss is usually between $400 to $500, maybe sometimes. Like, I did something on SI today, which was just terrible over the past couple of days, and I didn't pay attention, and I'm about to get stopped out for a $3,800 loss. This one loss, right, even though it's just one loss, is going to wipe out 5 or 6 of my trades, of good trades, which should never happen. Like, I'm explaining this because, number one, I'm just an open book, and number two, at the end of the day, like, people make mistakes no matter how long you've been doing this shit. I can't sit here in front of the computer all day to watch my trades because I have to run a business. But what I want to get through to you is that you need to stop caring about how many trades you're winning. It's cool to post it, but at the end of the day, all that is important is your average win versus your average loss. If your average win is 14%, like we have here on Tesla, and your average loss is 2.5%, then who cares if you show up every day and you lose 70% of the time? And yeah, so I can't read your name. I'm so sorry on YouTube, but they're saying it's the 11 EMA cross and the 22 cross on the hourly. Yeah, so you can do this on a daily. Like, if we were to look at Tesla here and we were to do the same exact thing on the daily chart instead of the 1 hour, you would see here that we would make 9,800% on Tesla within the past 13 years. But if we would have just held Tesla, we'd make 15,000. What I've noticed is, for some specific reason, the 1 hour is the best to do it off of, and you cannot include after hours trading, because after hours trading is just moving these indicators way too much to where you're going to get tagged out of shit like every 5 minutes, which is what I don't want. So that's why I don't do that. So Jason, going all the way back, I hope you're still here, my friend, to the question that you asked of when is a good time to go short, right? I see so many people on my YouTube who are like, how'd your put position do? Like, I lost $75, bro. But even if I didn't, it's like, at the end of the day, I don't take trades because Turnpike Racing, yeah, this is going to be up. So this is up. This is like the YouTube video for the day, basically. But I don't take trades because I think I'm going to be right. And I need that to be understood. Like, even in my academy, I don't take trades because I think I'm going to be right. I don't give a shit about being right. Look at this. You don't have to be right to make fucking bank. Like, you do not have to be right. The issue is that, and this is like one of the things I want to explain to you guys from removing like the fourth wall or whatever it is. This type of trading that I'm showing you is terrible for somebody like me, or somebody who is a YouTuber who wants to sell a course, because it's not sexy to just lose 50% of the time, right? But it's fucking effective. So instead, a lot of the times of what you see with different, and I'm not throwing shade, but it's like what you see with other types of things and other different companies or YouTubers, it's like they're focusing for super high percentage wins because that looks fucking good, right? But in reality, you need to just focus on your average wins and your average losses. And the only thing you have to understand here is you have to trust the process, guys. At one point, if you look at the screen where I'm highlighting, you had a max drawdown of 45%. That means at some point the stock gapped so fucking hard or something happened to where you couldn't stop out overnight, Oh no, that would be impossible. Why would our max draw? Hold on, this makes no sense. Why would our max drawdown be 45%? Oh, okay. All right. No, that's not biggest loss. Max drawdown is how low your account would have been at one point. Okay, never mind. That makes sense. That makes sense, guys. So at one point, your account would have actually been down 50%. And if you didn't trust the process and you walked away at that point, you would have walked away and been like, the stock market's bullshit. Like, you're a scammer. Or not just me, but anybody. Like, everyone walks away butthurt from the market and blames it on everything else besides themselves. Right? And this is the type of content that I want to bring to you guys more, because I feel that as we look at the landscape of trading, retail trading, and YouTube, everyone's going to get flushed out from the past 2 years, right? Like in the past 2 years, there were so many YouTubers, so many people in the finance space, so many people in the investing space. And as somebody who is in that space, like I love it because I love competition, because at the end of the day, it makes me better and it makes you guys, the consumer, better. But the problem that I have is I think a lot of people are going to get just smashed in the next year and a half, 2 years. And what I want to do is not care about views and not care about scaling this thing as fast as I could like I used to. I care a lot more about just building a solid community that will be here 15, 20 years from now. William S. This program is called Trend Spider, but I'm telling you, like, you can just do it on anything. But I want to go through and just look at an example before let's go through Tesla first, right? You had asked me, Jason, when is a good time to go short? I think where was that on? Yeah, here we go. So for me, I think somewhere between like 225, 230 is a pretty good time to go short. Up here at like 242 is your best time, because that's where the 200 SMA is. That is a huge brick of volume. And I actually think that's close to like a 40% recovery from our high at 403. Yeah, so that'd be right around where that Fibonacci level would be, that fib retracement. So for me, I personally think that you could open a short at 226, but I would wait until 242. Not because I think there's a huge chance, but the RVR is there, right? Like I'd be looking to enter a put at 226, set a very tight stop loss at about 231. And I'm telling you, like, if you do that, there is a 70% chance that you will lose money. But the thing is, like, you will have such a small amount of money you lost that it doesn't fucking matter. It's worth that massive risk that you have, or the massive reward that you have. And then what I would personally do is wait until we push back up to 243. And that's where I would take the trade that I'm kind of expecting for. And what I would do there is probably set or enter a 1 year put on Tesla. And this is probably what I'm going to do to hedge out my position. But what I would do is enter this put, and then I'd set a stop at 258. Because what I want to do once Tesla gets up in the 250s, we're near my average. But what I want to do is start to delta hedge against this. And if you guys don't know what delta hedging is, I can do a video on it, or we can do a live stream on it. It's a pretty hard, but also pretty simple to go through. So what are you waiting for? The highest resistance, not waiting until it shows weakness. For me, I'm just waiting for when the risk versus reward is there. That's it. Like that's what I'm looking for, because if I go short on Tesla at 227, right? I have for the record, I have a huge Tesla long-term position that's on an average of like 223. Like my average is not great. But for me, like if you were to go short at 226 and set that tight stop loss at like 232, that's a 2% loss on commons. Of course, if you're going with options, it's gonna be different, but just back down to support of 200 is a 10%, 12%, 14%, 15% gain. So it's like, I will take that every day. I will take that chance, because even if you have that type of return, you can, like, as long as you make one profitable trade out of 8, you will be back to where you initially were. So for me, that's my point. Don't bet the fucking house on anything, guys. Like, I'm telling you, don't do that. But for me, I'd be waiting for like 226, and I still have my shares and my long terms right now, so I'm cool. All right, Trader Jonesy. So where do you see in the next 6 months to a year? I want to do a full standalone video, and I keep saying this, but it's like one of those things that I want it to be so articulate, because I feel I'm not the most articulate individual when it comes to like politics, economics, etc. But where I see the market going is two things, right? I feel, and I said this within our Discord, so if you're not a part of our Discord server, this is a shameless plug. It's completely free. The link is in the description. You get access to free courses, free live streams, free seminars, free webinars. All the amazing shit is all over there. It's completely for free too, and you can upgrade for $1 to get access to my trades, or $1 a day. But what I was going to say is, like, I feel that the Fed specifically, I'm sorry, it's my alarm to go live. So I feel that specifically with the Fed and Jay Powell, that he wants to fully combat inflation entirely. Like, I feel that he personally does not care about wrecking the market, and I feel that he wants to put this out ASAP. Like, I said this yesterday, but the only way to fix the economy is to make the consumer poor, right? If you look at 2020, everyone had money, even though we were in a, I don't want to get demonetized. And in 2020 and 2021, we had this huge consumer spike of spending, and everyone was doing shit, and we're spending all this money, and we're going and buying houses like we really can't afford, and we're purchasing bigger things because money's fucking cheap, man. Like, I got a 2.8% or 2.9% interest on this house that I'm in right now. And if I were to get that now, my mortgage would be an extra like $1,200 a month just because rates are up to 8. So what happens is, eventually the consumer is like, I don't care, right? From eggs go to $3 to $5 in 2020. I don't give a shit, right? Like 2020, 2021, I don't care, whatever. Like, it's a little bit, it's pretty expensive, but like, I'm okay. And then I think what you've seen in 2022 is consumers are still spending in the same way. And you have to be honest with yourself here too, right? Like, how is your spending? Because something I've seen in my personal friends' lives, and I was talking about this yesterday, and that you're seeing with the consumer, if you look at the data of like the biggest e-com people like Amazon, 80% of their Black Friday sales came from buy now, pay later, right? And they had record-breaking sales, which means what? People are still buying more than ever, but they're fucking putting it on credit cards because they just can't keep up with how things were before. And now you see all these jobs laying off. You see all these different companies and everything happening. Like, I'm getting to a point now, and I'm sure some of you are, where you're like, I'm just not going to buy eggs for $7. Or like somebody said yesterday, like, I'll buy eggs for $7, but I'll have one a day instead of 2. And it's like, at some point, everything just becomes so expensive that you will not pay for it. And that's how inflation drops. Because the only way to kill inflation is to kill the consumer, is to kill the demand, or create a ton of supply. With supply chain issues right now, you cannot create a ton of supply. So you have to fucking kill demand. The only way you kill demand is by killing the American consumer. It's the only way. And I think that what happened, well, Walmart has organic eggs for $5. Dude, I went to an Acme like yesterday, and I got eggs for $7. But like, I go to Whole Foods and I get pasture raised eggs for like $6.50. I'm like, what the fuck? Anyway, side tangent. But what I'm trying to say is, like, I feel that what is going to happen is that we are not being aggressive enough. When the Fed tightens and they do heavy amounts of QT, which is quantitative tightening, the market takes a massive hit. And if you're a politician and you're going into midterms, you don't want that. If you're a politician and you're going into a presidential election in 2 years, or a year, I guess, yeah, a year, you don't want that. Like, you just don't want any of that if you're anybody in power. But the Fed's job, and I don't know if you guys know this either, but the Fed's job initially was to be separate, like a separate entity from the United States government. The goal of the Federal Reserve was really to be like, listen, if we need to fix shit, fuck the market, fuck politicians, fuck whoever it is. Like, we have to combat inflation, and that's our sole job. They're supposed to be like their own governing body entity in charge of everything, from the Federal Reserve standpoint. Now, what I think is happening is we're pulling back too fast. I think that we're going down to 0.25 basis points too quickly, which is helping the market. It's helping the prices of stocks. It's helping all of that. But I'm telling you, God be my fucking witness. I actually did this. This is funny. I think you guys can see my screen. Yes, you can. Okay, so look at this, right? This is hilarious because I put this up yesterday. No, this isn't it. I have to find it. But I posted in Discord, and I took a screenshot of it actually so that I could go through and save it so that later hopefully I can be like, hey, look. But I think honestly what's going to happen is we're going to see less tightening as we are 0.25% or 25 basis points. And I think that what's going to happen is we're going to have a really good Q1 like we have now. I think we're going to have a really good Q2, maybe mid to end of Q2. And I think that one of two things is going to happen, right? We're going to start to see the Fed tick up again at 0.5, which is going to elude the fact that the Fed knows that interest rates are going to fucking rip again. And that's going to kill the market, but not as bad. Or what I personally think is going to happen is we're going to see inflation start to move back up into the 8, 9, 10, 12% range. And I'm telling you that even if we see a tick up by 0.5%, 0.25% of inflation, if we do not see inflation go down every single time, this market is going to freak the fuck out. The market is a crying, screaming child that wants nothing but whatever the fuck it wants at its time, right? And the goal of the market for you is to just let the child cry. I know that's like really bad parenting. Don't do that to your own kids, but let the child cry, think correctively or in the most objective standpoint that you possibly can. And then from there, take action. And what I think is going to happen is I think Tesla's going to close this year at 250. I think we're going to move up to 225. I think we're going to move up to 245. I think we're going to hit 250. I think SPY is probably going to continue to pop maybe up to highs of 420 again, maybe 426. And what I think is going to happen is we're going to see inflation ramp up. We're going to see it continue to tick up like we did in the 70s. I think that the Fed is going to try to chase inflation again, start to tighten once again, even harder. And it's going to be about a 2 to 3 year full-on thing to get rid of what should have been gone in a year if we would have done it properly. That's personally what I think, and that's why I believe the market's going to take another tick down. Now, with all of that said, I have about 50% of my total capital that I want in the market right now. Because if we recover to all-time highs, and I have 50% of my full net worth, everything I fucking have in the market because I believe in it so much, and we go back to all-time highs, I will be so happy. Like, I will be very, very happy. I will probably make over $1 million in the next couple of years. Easy, if shit goes the way that I'm expecting, a couple million. Now, if it doesn't, and the market craters, and Tesla goes to 100 again, goes down to 75, and SPY goes down to 350 or some shit, some wild stuff happens, I still have 50% of my net worth to average down at strategic levels. I think the issue is that people, especially like long-term investors who I would say are not a long-term, like, I see this happen where people will be like, oh, I got an inheritance of 15 grand. I'm going to go buy Tesla because Tesla's great over the next 10 years. All right, cool. But like, if you bought that at $1,200 and you don't have an amazingly paying, or not even amazingly paying job, but you don't have an extra couple $1,000s a month to continue to invest into Tesla, right? That money is just going to sit there for like, it'll probably take you a couple of years just to get back to even. And so for me, like, if you have money, but you don't have consistent income that you can put into the market, don't go ahead and just throw everything you have into the market at once, right? Because you need to be consistently averaging down or consistently dollar cost averaging from a long-term perspective. But to be quite honest, like, if you only have a couple of $1,000s, like, I would just focus on consistency of trading and investing in courses and skills, like not even trading courses, but like just courses, like to make, like, literally, I don't know if you guys know this, fucking Harvard puts most of their classes up for free, completely for free, or at 90% off. Like, I'm taking Harvard investing in private equity classes right now for fucking free. Like, I'm taking designing an organization in a company, via Harvard for free. Like, if you want to make more money, invest in yourself, dude. Like, don't, like, getting a 30% return on like $2 grand in a year doesn't matter. Like, it really doesn't. What does matter is that you made that money, which means that you can replicate and do that again. That's why I'm always telling you, like, don't care about money, man. Like, money doesn't fucking matter, right? I don't care if I could get handed $1 million today, but I can never make a dime ever again. All right, let's get through this pretty quick. So one last thing I want to do is just show a couple of examples, and then we're going to go through some questions and stuff. But of this specific strategy, the 11 over the 22. So if you look at AMC, if you would have done this for AMC, you would have made 4,000% returns while AMC was down 58%. If you would have done this, let's do like AMD. It's a company a lot of people like. It's taking a bit to load. All right, if you would have done this with AMD, you would have made actually only 86% instead of 263. So AMD specifically would not have probably been the best for you. And you have to understand too that a lot of this has to do with the trends. Like you want to trade stocks that are consistently trending up. Like PayPal. This is a great example. Like PayPal has been trending down. The stock is down massively in the past couple of years, but you still would have made a 10% return. So I do want you to understand, like, this strategy is not going to work if you're trading a dog that is just dying and consistently going down. Trader Jonesy, how'd you get to where you are today? What amount did you start at, and how did you multiply account? So I started with like $5,000, and my goal is just to make $50 a day, which I think was very reasonable. And I turned, like, that money wasn't turned straight into $50,000. Like, I was living off of nothing. I took what little money I had, and I went and I bought a duplex for like 3% down. I barely had any money for it, but it was such a good fucking deal that I lived in one part for free and I rented the other out. And so I had no bills. I drove a car that I paid for. I had nothing. Like, I lived off of like Produce Junction, and like, I don't know if you guys have Produce Junction, but like, it's basically like a really crappy Trader Joe's. And I just continued to put money into the market. And then I started to realize, like, dude, I'm playing the poor man's game. Like, this is something you guys have to understand. And I don't want to get into this because fuck it, I'm going to. I am really big. Before I did all this, I was into like the menfluential space. I ran a blog. I was a dating coach. I helped a lot of guys transform their lives, not even just with women and dating, but like just becoming their best self, like through self-development before it was cool. And with the rise of dudes like Tate and Luke Belmar and Sneeko and all those guys and stuff, like, I know I have 95% of my audience is men. But I don't want to talk about those things too much, just because they're very controversial. But the one thing I want you guys to understand is you have to stop thinking in a poor man's mentality or a poor woman's mentality. And if you have a poor mentality, it doesn't mean that you yourself are poor mentally. It just means that what you were taught was wrong. And so going back to what you were saying, Trader Jonesy, like, how did I get to where I am today? It actually had nothing to do with like my trading, and it had to do with my broader picture, my broader time thinking, right? Like, the richest people in the world get paid to think, right? Like, Warren Buffett thinks all day. And when you're poor, you have no time to think. Like, you're always working. You're always trying to get by. You're always trying to get the next $20, next $100. You're always trying to get the next pair of shoes, the next iPhone, the next everything. Like, you're always fucking trying to do this, and it's a trap, and they do it to you on fucking purpose, right? And so we're sitting here freaking out, yelling at each other in Wall Street Bets Discords and doing all this shit over losing a couple of $100. And like, dude, don't worry about pennies. Like, don't worry about pennies, man. The truth of the matter is, you're not going to turn 10 grand into 2 million. Like, you're just not going to do that trading without any influx of capital at all. Good luck. There's probably 2% of people who can do that, and I'm not one of them. Like, I will tell you, I'm not one of them. And you're probably not one of them. I believe the best in all of you, but it's like, that is not realistic. And so what you have to do is you have to focus on building a system, because all the system is of trading, add a couple zeros on the end, bro. Right? Like, take your account that's at 2 grand and add 7 zeros. Like, could you turn 2 million into 5 million? Like, could you consistently get a 40% return or a 30% return or even a 20% return over 10 years trading, not holding a stock, but actually fucking trading? Could you consistently do that with $10 million? Right? Probably not. The money has nothing to do with it. It has everything to do with your ability to execute properly. So at the end of the day, just focus on that. That's what made me to where I am today, Jonesy, is like, I just realized that my $2,000 isn't going to make me a millionaire, right? Like even right now, I am making significantly more from selling this course and selling my product and doing YouTube than I am trading. I am at probably like the same. Like every month my trading makes me around $8,000 to $14,000. Sometimes like in January I'm up like 35 grand, which is just not normal. But like that's the goal, guys. Like you're never going to make millions and millions and millions of dollars trading unless you have millions and millions and millions of dollars. But here's one thing you can do, and this is not to like distress any of you guys, right? But at the end of the day, you have to just realize that like you can't make millions and millions of dollars trading unless you have millions, you can very realistically make $30,000 to $150,000 a year trading. And your goal should not be to just sit there and be a trader. Your goal should be to learn to trade so that you can quit your job, so that you can go do things that you're actually in love with, right? Like I love people. I love educating. I went to school for early childhood education. And because I'm a felon for marijuana, I dropped out and I can't teach. But now I have a school that's 10 times bigger than the high school that flunked me. Like your goal, trading should be like the bridge that gets you to where you want to be in life, right? Like the issue is people want that to be too quick. People want to stop working a chef job at the restaurant and then go just do this full time with like a couple $1,000s. And like, that's never going to work, man. It's just really not. But like what you could do, just sell. That's what I used to do, man. Like, I'm not going to lie. That's what I used to do. Go Guthin. That's how I got my business mindset, was through selling the cannabis like 15 years ago. But I mean, the biggest thing I would say is just think big picture, guys. Like just think big picture. It's the most important thing. Don't think in small terms. Spend 15 minutes a day thinking about your life. Like actually writing down and planning your life and where you want to go. Because people don't do that. I don't even get to do that with my business because I'm just here trying to juggle everything so much. And what I'm trying to do going into 2023 is to focus on growing this business long term, focus on growing this community long term, and focus on growing this channel long term. Let's quickly go through some shit, and I'm just going sideways even though I'm sick. I don't know how I'm still just ranting. Jeff Webb, not financial advice, but since there's been such large gains this month, would you profit? I bought at 105. It's a really good price. Like personally, if I got in at the hundreds and I didn't want to hold everything long term, I'd probably be selling like 40%, 50%. Actually, Jason or Jeff, I hope you're still here, man. Not financial advice, but here's exactly what I would do to anybody. If you got in Tesla at 100, I personally would sell half of my position because that means you're up over 100%. And Jeff, that would mean that if you sell your initial position, you get to hold those shares of Tesla for life completely for free, like completely for free. And that's what I would do, is just hold them for life, since it's a free position for your retirement long term. Cheers for all the great content. Storm Juice from Australia. What's up, bro? I need to go to Australia so much. I want to go so bad. I have friends in South Africa. I have friends in Australia, and I need to like get out of the US for a bit. When's a good time for calls today? What do you think about a bottom out, or do you see it going higher? Honestly, I wouldn't chase Tesla today. Like, we're up 4.59%. We have a good like VWAP support right here. You guys can see. I'm actually going to go through on this right. Let's just chuck a 2 minute up. Good VWAP support. So if somebody is looking, actually, fuck, I might actually day trade this. So look, if you're looking at the 2 minute and we were to throw up a fib retracement, what are some things you guys are noticing? Fib retracement, and what is this technical setup here? What is this? Bull flag? Sort of. Yeah, it's a bull flag, but because it's tightening here, I'd say it's more of a descending wedge. But it's like a bull flag descending wedge. Yeah, so at the end of the day, this is pretty fucking good. Like, you could enter at 210. Like, here's I'll just chuck this up. This is how I would play this. All right, so personally, this is how I would set this up. I would enter at 210. I'd stop out at 209.32, which is a 0.3% loss. You have a very high chance of getting stopped out. I want you to understand that. It's a very high chance. But up to highs today is a 1.85% return. So your RVR is 6. So I think there's a pretty high chance you get stopped out, but that's a really good RVR. If you want the best entry for the day, what I would look to do is see if we can pull back down to 209, and I'd enter around 209 because that's where this 0.6 fib level is right here. And if we were to go and, I mean, this is gonna, yeah, so actually 210's your move, because here's your bookmap level, and we have 117,000 down on 210. I think Tesla's gonna rip up to 215 here. I might follow this. Damn, that was perfect. Like, literally to perfection, broke right through that resistance pullback. Yeah, this is looking pretty solid here. I'm not gonna have time to watch it. I have a lot to do after this, so I'm not gonna take it because it is a day trade, but this is looking juicy. Bookmap is gold, bro. It really is. Yeah, bookmap's super solid. All right, let's go through a couple of last things. We already went over that. We're gonna keep this up. How do you think Tesla will go back down? Oh, how low do you think? I think Tesla will go back to potentially 100, maybe 75, depending upon how bad things get from what I was saying earlier, just like as the economy overall. But that's why I have a pretty huge position right now. So in case that doesn't happen, I'm good. Walmart has organic. Oh, we were doing over that. Can we use this shorting? Turnpike Racing League. Yeah, you can actually use this strategy to short. I was running some tests earlier. The issue is you just... So here's the problem with this strategy is you have to trade something that's consistently uptrending, like over years and years and years and years and years. And so if you're going to use this for shorting, you would have to short something that's in a consistent downtrend, right? That's the way that you would do this. You can't, like, it wouldn't work for something that's consistently uptrending for years. Can we do Nvidia, please? Let's do it up, Killbum. I hope you're still here. I don't even know how you say your name. All right, so let's talk about Nvidia. I'm just gonna actually make it bigger so you can see. Actually, that's the wrong one. This one. All right, so Nvidia, inverted head and shoulders. Talk about this for a while. I've posted this within our Discord, so if you're part of the Discord, go check it out. It's free. But looking here, I think that we're probably going to see a pretty strong resistance here. Like, 230 is massive, and it's that last level before we have no volume. There's no volume from 233 to like 325. So I think we're going to reject here at 230 and probably come back and test 200, maybe test 190. But if we don't, we might just rip to all-time highs. But this is a pretty solid time to go short on Nvidia. Not because, once again, not because I think that it's a high chance of probability, but because it's just a solid setup, right? If we were to throw out this Fibonacci retracement level, we're at that 0.5 fib right now. So I might actually enter a put position. You know what I'm going to do? I'm going to wait for 250. Because the issue I have right now is our RSI is at 71. It's really not even like overpriced. I'll wait. It's always better just to wait, honestly. But yeah, Nvidia looks pretty good for like a 1 year out or like 6 months short. Pete, what is one thing that you do every day that without it would negatively impact you? Trading or like my life? That's a good question, man. Fuck, I don't know. Trading would probably be... I don't know, man. Like, life. Because I'll say with trading, like, I am probably the most hands-off trader like I've ever met. And I feel that like you have to have a relationship of hands-off. As far as life, man, there's a lot, dude. Like, One day that would negatively affect it. I don't want to say a workout because it's just like so cliche, but like I would probably say like some sort of learning, like reading or learning. I read for at least 2 years a day, or 2 years a day, 2 hours a day usually, and or listen for a couple hours a day. Prayer, dude, I do actually want to start meditating more and stuff. You need more you time. I do, man. But like at the end of the day, like I only got one life here, and I feel like I have the ability to change so many lives in the future, way past trading, like way past all of this. Like I want to at one point become a Mr. Beast, not like making funny videos and shit, but like the amount of like philanthropic things that that guy does is nuts. And one of the things that I see is, I guess this is a little selfish too, right? But is like one of the biggest assets to, and this is all right, whatever. We're the last thing we're gonna talk about, but this is gonna be more business. This is not gonna actually be like related to the stock market. But one of the things about business is I talk about leverage a lot, right? So one of the things about business is let's look at my company right now. The most priceless thing that we own right now, right? Like my company owns right now is your information. Obviously, I'm not going to sell it. I'm never going to sell it. But you have to fucking understand that your information and data specifically is the most important thing right now. Like when I look at Tesla, I don't really give too much fucks about the car company. I care about the data. I care about the data that everybody is getting. Uber is a data company, right? Part of Tesla is a data company. Amazon Cloud Web Services is a data company. Everything is data. And when you have very high dialed in types of people that you can target for ads and shit, it's so huge. Like I have an email list with all of your emails. I don't blow it up, right? I could probably sell my email list for $130,000, $140,000, $150,000 because all of you, chances are probably 98% men between the ages of 18 and 45. You probably make somewhere between $40,000 to $140,000 a year, and you're obviously into trading and you're into technology and you're into the market and you're probably into somewhat of entrepreneurship. So that type of information is more expensive than just like somebody watching a funny TikTok video, because you're such a dialed in customer that information is worth so much money to people. That's why people like Graham Stephan get so much money on YouTube from ad revenue specifically, because his customers, the people watching his videos, are so hyper targeted that ad people will have no problem spending or paying people like him or myself even. My CPMs are nuts. They're so high. But it's because the people who are watching my video are very specific people. And so what you have to understand is that when you're looking at business, don't look at the money you make every month, right? Like when I look at this server, so everyone's like, why do you sell a course? I actually want to put this out, is everyone's like, why do you sell a course? All right, two things. Number one, three things. Number one, who the fuck doesn't want more money? Who doesn't want more consistent money on top of that? Okay. Number two, I get to help people. That's phenomenal. Number three, if I want to go buy real estate properties, or if I want to go do something where it requires me to take a loan for an investment, you cannot do that if your sole income is from the stock market. It doesn't matter if you have $1 million. They don't give a shit. They want to see consistent income because that's how the bank gets paid. So that's a huge reason why I started this company, was because I was like, I can leverage the company to go buy real estate. But here's the biggest reason for this, for the biggest thing where I see is two things. Number one, when you have a business like this, you have access. I have 10,000 people right now in our Discord that I could DM and be like, yo, listen, which I'm not going to do this, right? But hey, we're starting a real estate syndicate. We're going to go buy 220 apartments in Southeast Miami. Here's the deal. Would you like to get in on it? We're taking investments for $5,000 with monthly dividends, basically like what Grant Cardone does, right? Like Grant Cardone doesn't put out YouTube videos and do all this shit to make ad revenue or sell his courses. Where Grant Cardone makes most of his money, and same with like Alex Hormozy, which is a great example, is they partner with the top 10% of their followers. Because if I could even get $10,000 for an investment from 100 people out of the 10,000 here, like That's where I see it. But where I see it even higher is the philanthropic part of it, to where like when you have access to hundreds of thousands of people that you've helped over your life and you have a really good fucking cause, people will have no problem to donate back, right? Like the beautiful thing about my company is if I can make you an extra $500 to $600 a month, you have no problem paying me an extra $30, $40, $50 a month, right? And I have guys, no joke, like no joke, guys who have actually went from like 140,000 in my private mentorship group up to 150, 160, up to $1 million. Like seriously, like trade better than me. And I taught them. And they're always like, dude, you changed my life. Like, how can I help? And I always want to be like, donate 25 grand to this charity, like to my charity, because I don't want to give money to charities. Fuck them. I don't want to do that. Most charities are scum and shit. What I want to do is start a YouTube channel showing people where that money goes and giving a portion of my profits every year to the charities, to give a portion of our company to those charities, to run all of these things and allow you guys to see that, right? Like I want to work with so many different things, but that's where I see it. Like that's where I see, because last thing before we hop off, but all I've ever wanted to do is help people. And the one thing I notice is I just can't help people alone. So instead of me going to a shelter and volunteering an hour a day, which would still be amazing, right? And I should do that. And I try to at food banks and stuff near our house. But like, instead of me doing that, or instead of me just giving them $25,000 a year or $50,000 a year, I could create a fucking empire and an army on the internet that could potentially give millions of dollars to people every year. That's leverage. That's rich thinking. And I want you to do that with every aspect of your life, right? If you're like, dude, I really want to help this homeless shelter down the street, but like, you know, I should go and donate some time, and I will, so that I can be a part of that. But at the end of the day, like, you need to think big picture. Like, dude, instead of like Mr. Beast, instead of curing one person's blindness, he cured 4,000 people's blindness in a month because he has leverage of people. All right, boys, I'm fucking out. I'll see ya. I'm sorry for talking your ear off. It will drop to 206, says Tiago. Yeah, it might. Let's go back really quick. Let's see where this is. Ooh. All right, so RVR on this is actually pretty good now. All right, so because we broke this VWAP, that's not the best sign, but if we can hit 209, I'm going to go in. I'll keep you guys posted. Join our Discord, guys. Hit the sub button. It means the fucking world to me. I want to do more and more of these. It just takes a lot out of me, like, mentally. I'm going to be honest, because not in a bad way, but, like, I come on here and I try to just be as real as I can, like, all the time. All right, boys. I love you. Have a good day, and I'll see you later. Peace.